What's going on, everyone? CryptoVatsik here with another technical analysis video for you. If you enjoy this content, I'd really appreciate it if you smash that like button. As always, nothing of what you're about to see is considered financial advice, and they're just my opinions. Let's get right into it. Okay, today's video is going to be covering AVAX, otherwise known as Avalanche. We're currently on the weekly here on Binance. And the green zone you currently see here on the chart derives from my previous video quite some time ago, in which I covered some sort of bottom to form within this green area. I'll just pull up a snippet quickly from that previous video. So as you can see, this green zone was my buy zone, and it derived from this previous high and low back in 2021. And my expectation was that we could see some further downside within green until we ultimately formed some sort of bottom right around $10 or just under. So flip back to the other chart. Okay, so as you can see, at the time we had some more downside to go, until we did form some sort of local bottom around $10.50. And the reason being is because I thought that price was going to have a pretty hard time breaching these lows from back here. Now the other thing was I pointed out in my previous video that we had a bullish divergence going on. So we'll just bring up RSI. So in that video, I covered that we were making new lows in price, but we had a pretty significant higher low on RSI. So you can see once this bullish divergence was confirmed, it provided a pretty good pump. So if you're able to take advantage of that from my previous video, that's awesome. But otherwise, as I say, that's in hindsight now, so we got to focus on what we're currently seeing. So one thing I do really like to see is the fact that we've broken out of this downward trend from the peaks that we had back in August and then the next peak in October. But the one thing I'm always careful about is drawing these trends on the log chart versus non-log chart. So as you can see, we're on the log chart here. We've got the breakout confirmed. Now let's flip back to the non-log and just verify that it's also breaking out. So there you go. The peak not reaching the diagonal on the non-log. However, no matter how you draw it, it's breaking out and it's confirmed breakout. So just another piece of added confluence that I like to see. Okay, let's zoom back out, flip back to the log chart, and identify those key levels on the high time frame weekly chart here. Okay, the first level I'm going to mark out is clearly from this high that we had back in August. The next area of interest for me clearly is just going to be from this swing low that we had in June. And then the last one that we're going to mark out comes from this minor swing high in November that we had. So we'll mark those three levels out and then drill into the lower time frame. Okay, let's flip down to the daily chart. Okay, so I'm liking these levels from this swing low back in June. It provided an area of support until October, until that level was lost and we deviated below the range. However, shortly thereafter, we had a really nice reclaim of that level right here on January this year. So confirmed reclaim and acceptance above that level, and clearly a macro market structure break from this previous lower high here, making fresh new highs again and again. So the trend reversal is confirmed from that front. Personally, for me, this macro level at just $16 is going to be my directional control point, meaning above this level, bulls are in control, but on a break below, bears regain control. We have also, with confidence, reclaimed the 100 exponential moving average in the thin gray line here. However, we have yet to reclaim the 200. So personally, want to see a reclaim of that EMA for a push to the high, and it would also be in line with this parallel channel breakout. So this parallel channel that we've got here forming on the daily, downward sloping, would like to see a breakout and bullish retest for more upside. And I'd be targeting the high here at $28 or just over. Now, from an Elliott wave standpoint, if this is our first impulsive move off of our bottom, meaning it is our first wave of our larger 5-wave structure, then to add some confluence for this target, I'll take my fib extension tool, take it from the low of the leg to the high to that retracement level, and I'd be targeting a 1-to-1 extension of that first overall leg. So as you can see, that is also in line with my target up here at $28. Now that would also be on the basis that this has confirmed our low here. If this does continue to correct down in this channel, I'd be interested in seeing where the 618 fib lies. And you can see it lines up right here from this previous low, drag it out, find the 618. So it's possible that we deviate below this directional control point level for a quick reclaim and then possibly break out, and then it's up from that point. That would be my scenario 2. Now we've had some good volume on this leg so far, but on the basis that we get another leg up, I would like to see this decline in volume break and then start to increase again. I don't want to see volume continue to taper like this with a slow grind up. It would lead me to believe the move is weak and that we possibly elevator back down. And from a corrective standpoint on this overall leg, perhaps we don't break this high right away and we do something like this. But if we confirm that higher low and we can hold that trend, then this would be a running flat ABC corrective structure of this overall first impulsive wave, meaning this would complete our wave 2 and then set the stage for our wave 3. Now just getting into this a little bit closer here, we've also got a horizontal parallel channel from our swing high down to our swing low. And so you'll notice our current local resistance area being right here at the equilibrium of that range. So like I said, if we get some sort of ABC corrective structure where we get another chance down near the range low to go long, that would be ideal to sweep these lows for a target back up to the range high, or ultimately, like I said, back up to $28. But again, remembering all the while having to must hold this directional control point level. We'll just make that a bit more bold here at $16. If we don't hold that, in my opinion, bears are back in control. And then at that point, I think a sweep of the lows is very possible. Now just zooming back out again a little bit to get the bigger picture. If we can get a sweep of this high at $28, that's when things get really interesting, because that's really our last area of data that has an identified point of resistance. Meaning if you just look left, previous price history prior to that high does not have any clear data to tell me that there's a significant resistance level. So if we do sweep that high and we're able to confirm and accept above it, in my opinion, there's really nothing stopping price from shooting up to this low here that we had back in January 2022. This is essentially a macro void or inefficient balance in price that I think price would shoot through like butter if we get that reclaim of $28. Now, keeping in mind the market with regards to Bitcoin and Ethereum would have to allow that to happen. If Bitcoin and Ethereum start dumping again, then I do not see that happening. Perhaps in that case, we do get a test of $28 and then some sort of fifth leg deviating above the level, and then we get our macro correction after that. That's also a pretty likely scenario I see playing. But it would also just mean that we are correcting at an elevated price above this directional control point level at $16. That formed a macro shelf for quite some time that I think if we can hold it on a macro scale, bulls are still in very much control. So lots of different ways this could play out. Those are kind of the few scenarios that I see potentially taking place. Now, of course, it's always important to stay objective and remember that if price starts to show weakness and we're not able to break this downward trend here and we slowly chop and grind back down towards my DCP point, then it would lead me to believe that price is potentially about to break this level and come back down to the lows. But if we do something like this and it just prolongs that chop above that DCP point, then perhaps it's just forming some form of reaccumulation in a macro range that is powering up for a major break to the upside on the basis that we hold $16. But for me, my bias for now is to the upside. So I would be looking for reasons to go long. Like I said, I'd be looking for a break of this downward diagonal, something like this. I'd be looking for a sweep of this low, either stop below the low, target the high. Or you could think of it like this. If you remember the equilibrium on that range that we had here on a reclaim of that EQ, then perhaps you get an entry here. It's whatever you're comfortable with and what your risk parameters allow you to trade with. But for now, ultimately, the way I view this is this was our prior range that we had from our swing high off our swing low, with the equilibrium of this range being somewhere in the middle here at the 50% level, and we'll just make that one dashed. And realistically, we are just now back inside that range of the bottom 50th percentile. So that's also why that's my directional control point level, because below that range, we entered a new area of demand. We made a low. Yes, we tested the bottom of that green zone that I had marked out from my previous video from this area over here in 2021. However, now we are back inside that prior macro range, as I said. So all this price action down here is more or less irrelevant at this point. What's relevant to me is our range high, range low, and equilibrium. So those are the three things I'm watching and I'll be trading now with, because now we have confirmed reclaimed that range low. So on the confirmed reclaim of that range low, you target the EQ, which would have worked out fine. And on a reclaim of that EQ, you target the range high. And within the bottom 50th percentile of this range, essentially all it is just sweeps of liquidity. Sweeping liquidity at near the EQ, sweeping liquidity near the bottom. And so could provide some good trade setups for sure as we chop, but I'm ultimately looking for that larger move. The range EQ here is also our monthly open. So I think it would be a strong sign of strength if we're able to reclaim that February monthly open. February was a very strong month from our bottom in December, pushed up to a macro swing high. And since the monthly open, we've been correcting. So perhaps for a time frame estimate, we get a green March sort of thing. Now, one last thing I'll be watching as well comes back to what an impulsive move is. After we had our bottom here, we had this area of bearish consolidation, which was really just our previous lower high until we got that market structure break and bullish retest, leading up to that impulsive move. That was able to push so high that we ended up reclaiming that range low that I mentioned. So for the next leg to be considered an impulsive move, it needs to break out of a channel. And the channel that I'm really seeing at the moment is basically right here. So for me to believe that the next leg is an impulsive one, we need to see a clean break out of this channel range high versus just a slow grind up like this, even though we could potentially make new highs, is not an impulsive move. And to continue a 5-wave macro structure, we need to see those impulsive moves. So you break this with confidence, I think we start working on our major third leg, which would mean that I think we're pushing up much higher. So anyways, guys, that's pretty much it for today's video. I really appreciate you joining. If you took something away from this video, that's awesome. Please smash that like button. You can always follow me on Twitter at CryptoVatsik as well. And as always, let me know what you think in the comments. Thanks again. We'll see you in the next one. Peace.